All right, this is the first session on chapter 1, and we're going to be covering several learning objectives. First learning objective we'll cover in this session is identify the activities and uses associated with accounting. And then during the second session, we'll cover some basic building blocks of accounting, including ethics, principles, and assumptions. What is the accounting equation? Analyze the effects of business transactions on the accounting equation. And lastly, a little discussion on the reports that come out of the accounting system. All right, so who are the users and what are the activities that go on in the accounting world? Accounting consists basically of 3 activities. And when we're talking about the activity, we're talking about what role does the accountant in a company play as far as accounting activities. First is identification or identifies. Second is recording. And third is communicating the economic events of an organization to interested users. So when you look at this slide, we have 3 phases of what the accountant actually does. First step the accountant has to be trained to do is determine or identify transactions in the business that have an economic impact. So they have to be able to determine what transactions that go on the company on a daily basis are impacting the financial situation of the company, or what we refer to as the economics of the company. So if, in this case, an employee purchases a computer from Chip City for the company, that is an economic transaction that the accountant has to be aware of and must record in the accounting records. So that is the second activity, the recording process. In this process is where the accountant has to take and specifically record every single transaction. Every single transaction is unique to other transactions. In the proper accounts, we call them accounts, and during the process of recording, they also have to classify, you also have to classify the transactions in accordance with what they are in terms of the accounting records. And then at the end of the accounting period, and typically this would be at the end of the month, they have to summarize everything that happened financially to the company. And then the third activity is take this summary of the economic events and communicate it to interested users by preparing accounting reports. And then usually the accountant's role is to analyze and interpret what happened to the company financially during this accounting period. For example, how did the sales do? How were the expenses? Did the company generate a profit or a loss? Did the company generate positive cash flow or negative cash flow, etc.? Okay, this information is useful to many different parties, both inside the company and outside the company. With respect to individuals inside the company, we refer them to as internal users. specifically employees that have responsibility for managing the business, need accounting information to make proper decisions. So you can see, in a company, you might have people that work in marketing that will need to know what the cost of making a product is in order to determine what is the proper price that should be put on the product for sale to the customer. Management is another area of the company. This is the CEO, the CFO that has to determine what products the company should invest in to sell. The Human Resources Department needs accounting information with respect to cost of wages to determine whether or not the company can afford to pay a raise during the year. And then even in the finance department, they have to know if there's sufficient cash to reward shareholders by paying them a dividend. So all of these decisions you see here have to be performed using information from the accounting system. As far as external users, they are not employees of the company, but they also need information about what's going on in the company financially to make proper decisions. Investors of a company who buy stocks of corporations need financial information to determine whether or not they should make investments in the company by purchasing their stock. Creditors like banks also need periodic information as to how the company is doing financially to determine if the loans that they may have outstanding with the company are at risk of being not paid back. And they can gauge the situation by simply getting a set of their financial reports and reviewing them to determine whether or not they have any risk of default on the loan. So this is just giving you an idea of who the users are of the information coming out of the accounting system. There's internal users and there's external users. Okay, so this is just a first recording using Zoom. So we're going to test it and see if it works out okay. Hopefully it works out okay, and we can continue to use Zoom for future sessions. Thank you.